The stock market is hitting a record height. People who have invested in the bottom of this crash doubled or in some case tripled their money. Think about it. It took you 10 years to save $1,000 and you had the opportunity to save your 20 years of the triple your money in just 5 months. I'm not even exaggerating. The exact same Tesla stocks that used to cost $500 6 months ago now worth over $1,500. However, a lot of the people missed this opportunity, which comes once in the decade, simply because they don't know enough about the stock market. So, if you are an investor, please skip this video because we will cover the basis of the stocks market. What exactly is the stocks? How does the stocks market works? How to buy stocks? How to find the good stocks that will earn you money? But before we start, make sure you to give this video the thumbs up. And if you want to learn more about the stocks market, you can join our community of the investors on Patreon. Stock market for the absolute beginners. Here's the simple way to understand the stock market. Suppose you come up with the idea of the selling stuff online. You hire a bunch of the developers to build their website for you. For the sake of the simplifications, let's say you decided to name your website Amazon.com. It's a simple and create name that accidentally crossed your mind. To make things easier, let's say you start selling books. Luckily for you, business is going awesome, but you have a problem. You are making money, but not enough to expand faster. Theoretically, you can start selling everything on your website, but electronic to kitchen equipment, but you need the capital to rent the places and build your infrastructure. So if you are not going to do that, your competitor will take advantage of that and will crash you. But don't worry, here's a brilliant idea. You can sell a portion of your company and use that money to expand your businesses. So your company is value $100 million. Drive your company to the 1 million stocks with each stock price to $100. Let's say you continue and investors to buy 100,000 stocks for $10 million. Congrats. Now you have the money to expand your business and that investors gets a 10% stake in your valuable businesses. You are going to great, but businesses is growing fast. But what to expect even further. Since you have made the name of yourself, there's tons of the people in the country or even worldwide who want to buy the small piece of your company. But you can't simply sell a piece of your company from your office. You need to list your company in the place called the stock market. It's the market of the companies where people came to buy and sell small portions of the companies, called stocks such as the New York Stock Exchange or the Nasdaq. Since you own 90% of your company, let's say you list 200,000 stocks on the sale in the market and raise the millions to expand. Of course, we have oversimplified everything here, but what is a great idea? But most of the stocks in the stock market are not sold by companies directly, but rather by the people who have purchased them when the company listed their stocks for the first time. That known as APO, Initial Public Offering. If you have the stocks market to buy same Apple stocks, you probably won't be buying them from the Apple directory, but from someone else who owns a bunch of them and wants to sell them. Maybe he purchased them last year and the price has doubled since then, and now he wants to sell them to make the profit. Brokers, the middleman you need, unfortunately, you can get into your car, drive to the stocks market and find the Apple store and buy some Apple shares. That's not how it works. You need a middleman who has the relationships with the stocks exchange market. They are known as the brokers. It can easier be an individual or the firm or even your local bank. It's pretty much like the real estate. You can purchase a house directly from your previous owner. You need someone who is islands to buy or sell the real estate, such as the real estate agent. So, if you want to buy the Apple, Amazon, or whatever shares from the stocks market, you need to find a broker. Usually, they have to get paid for their hard work for helping you to buy or sell stocks by the changing your small commissions fee. It could be at a fixed amount per trade or a fixed percentage of the total trade. Most banks totally also provide such services, but recently there has been a lot of the innovations in this industry. In 2013, two guys from the California launched the app called Robinhood, a broker agency that made buying and selling stocks possible from the comfort of your smartphone. The best part is that it's completely free. Now, do you have money to stock market? Now, since you know that exactly is the stocks and now to buy one, you are probably wondering why you should buy stocks at all. I mean, why would you give the money you have earned with blood and sweat to these multi-billion-dollar corporations that make so much money that they can buy entire countries? Well, let's say hypothetically, company A produces sells cars and has total numbers of the 1,000 shares, where each share costs $100. So the total value of the entire company is $100,000. If let's say the next year company A builds another factory, hires more people, and eventually sells more cars, the company's total value rises, let's say, to $130,000. But since the company consists of the 1,000 stocks, where each cost $100 individually, each stock was increased by the $30, since the company was a whole rose by the 30%. So if you have the purchase one stocks from the company A last year for $100, today it would worth $130. You can sell it and make profit of the $30. In the other words, when you are investing in the stocks market, you are buying portions of the businesses which are called stocks, and as these businesses grows, so the value of your stocks. But you may wonder if by buying stocks I became the owner of the company, portion of the company, shouldn't they share with me the profits the company makes? Yes, they have to. They are known as dividends. Apple, for example, paid the dividends of the over $3 for the each stocks last year. Why stocks price change? By now you probably think that instead of the saving money I can buy stocks and my wealth will grow. Theoretically, yeah, once of the companies that grew really fast in the recent decades was Apple, since iPhone sales were increasing every year after year. In 2014, a single Apple stocks used to cost around $100. 6 years later, the company keeps expanding and introing on more products and increasing their sales. The stock's price rose to 379 at the time of my writing the scripts. In other words, your $100 invested in Apple would worth $379. When you buy the single share, it doesn't make a big difference. But let's say you have invested $100,000. Your investments would worth $379. You have more than triple your investments in just 6 years. But before you threw your money into the stocks market because it looks easy, hear me out, because there is the coach. Not everything is sunshine and rainbows, because these stocks are listed on the public exchange. The number of the factors that influence the price of the stocks are too many. And often the price of the stocks doesn't represent the real value of the company. Let's say hypothetically, there is the electric car company that gets a lot of the hype around it. For the sake of simplicity, let's call it Tesla. The company might generate a lot of the hype around it because its CEO is the marketing genius. A lot of the people might get excited and start purchasing Tesla stocks, and according to the laws of economics, when the demand outweighs the supply, the price increase. The price might double or triple in the matter of the few months, but its real value didn't double or triple. The demand officially increased it. In the last 6 months, Tesla stocks increased from the $500 to $1,500. Tesla is the great company and doing the great things, and it will probably be super profitable sometime in the future. But now, as an investment point of the view, the stock's price today doesn't represent the value of the company, which means it's overvalued, which means sooner or later the price will fall to its true value. As investors, you either want to buy the stocks of the companies that represents their true value, or stocks that are undervalued, because both of these rise in the future. Of course, that's not an easy job. You have to analyze companies, read their financial statements, asset, their business models, and make the rational decision based on the facts and the numbers, which is what we teach here on this channel. However, if you want to know where I invest my money, you can follow me on the Patreon. You will be the first to know. I will also explain why I have invested in that company. You can ask me questions and I will gladly answer all of them. Other than that, thank you for watching and I'll see you in the next video.